Reserve Bank is coming out on the 25th of May with their interest rate decision. What do we as RMB expect them to do?
We're expecting a 25 basis point hike, so taking the repo rate from 7.75% to 8%. This is our expectation, we hope, the final hike in the current hiking cycle.
Yeah, we've been repeatedly surprised by how much the Reserve Bank has had to hike. And I see also the markets maybe thinking this won't be the last hike, they'll continue to hike. So just your thoughts on the risks of yet further hikes after this.
So absolutely, we do think there are risks to this being the terminal rate. We have been wrong-footed a couple of times on this hiking cycle, and it comes down to a couple of things. One is if the rand weakens further than the 1950 we saw last week, that's going to then have quite strong influences on, for example, our fuel prices in the immediate kind of term, as well as a number of our commodity prices, including food. And so that could keep prices sticky in that respect. This then, particularly because food and fuel are necessities and are prices which remain quite highly in the front of mind for consumers, can have quite a strong effect on expectations. And so, there would be an additional worry that inflation expectations will not only remain sticky, but possibly even rise further. So, inflation impact from a weaker rand and inflation expectations making it more broader could lead to further tightness, but it is really a risk view for us rather than our central view.
Okay, and just very quickly on that food price inflation, it's been a repeated surprise this year. What's our views on where food price inflation is going?
So we expect food price inflation to peak in April at 14.5%, and then to start coming down. It is going to remain sticky, so it is going to remain high. But, some kind of tentative signs that we have that this is going to happen at long last is really that your breads and cereals inflation, which peaked in January, have been falling fairly consistently since then. Meat prices have also started coming down a bit, and also oils and fats, which peaked largely in response to the outbreak of the war in Ukraine due to its importance for a number of kind of soft commodities related to oil production, as well as other oil shortages around the world for foodstuffs, peaked at a very high level, over 30% year on year in August, and that has also been coming down quite steadily. So a good chance that we will see, the food disinflation beginning. Given this outlook, John, what are your views on interest rate hedging?
Yeah, so our clients are obviously worried by the continued rise in interest rates. We have been talking to them repeatedly over the past 2 years, warning about these risks. But at this stage, late in the cycle, with the market pricing so many rate hikes, it looks very expensive to us for corporates to hedge using the typical swaps. Most clients are rather looking at alternatives, caps, cap spreads, the structured products, which offer a lot more value. And I'd just suggest our corporates reach out to us to unpack those issues.